We have a quick question from a subscriber saying that they are planning to go into a little bit more detail in their fundamental analysis, and they want to start by building out an economic tracker, economic data tracker, and want some tips from us on how they can go about doing so. Thanks for the question. Now, in my opinion, if you're really serious about building something like an economic tracker, I think it is something that can add another level of depth to your analysis, as long as you know how to use the data, of course, to make better trading decisions. And a good example of what I mean by this is, just take a look at the onslaught from COVID-19 and what that has had, what impact that has had on economic data. With economies around the world basically in full national lockdowns for a couple of weeks and months, businesses completely shut down, the economy is grinding to a halt. It meant that the usual data that we look at to track an economy and to track the economic progress has been less important, at least some of them. And, just take a look at a quick example. Take something like let's take a PMI. Let's take the manufacturing PMI, right? You're talking about numbers going as low as 43.10 1 month and then jumping back up to 52.80. Take a look at the Chicago PMI, moving as low as 36.60 and then jumping to 51.90, right? Or take a look at NFP. It came in at 251,000 jobs gained in February, dropping by 1.3 million in March, then a whopping 20 million, then bouncing back by 2 million and another 4 million, and then a 1 million print. Taking a look at the normal way we've received these data, the normal data set, it just puts the massive skew that these types of events can create in the market in terms of economic data. And we do need to keep all of that in mind, keep those factors in mind. So, when you're taking on an endeavor of building an economic tracker, make sure that you understand it has limitations, right? Not only for events like COVID that skews the data, but also, due to any of the other various other factors that can affect asset prices, right? Yes, economic data is always important, but just looking at this alone is not going to give you necessarily a massive trading edge. You need to know how to use the data, right? So to give you an idea, look at how smart the market is, right? Sometimes, at least. If you take a look at the data, we only have this going back to November 17 on this one. And I want to highlight something of November 18. Even though you've seen a steady grind lower in these economic metrics, you can see that from November, really, you saw a deterioration in the data across the board. So barring, of course, what happened with COVID, if you just take a look at November 18, you can see a clear drop down. If you just look at the colors alone, you can see a clear drop down of how data started to deteriorate. Now, look at how smart the bond market was with this. If we take a look at the US government 10-year, and let's go to the daily, and we'll go all the way back to November 2018. And you can see how super accurate the market was, right? Bond market exactly anticipated the economy slowing down. Now remember, bond yields are an expression of what the markets expect interest rates to do. And take a look at the Fed funds rate. So the Fed was basically tightening monetary policy all the way into that November meeting. Now that's normally positive for something like a US 10-year. And then from November, you started moving lower. You see it moving lower, even hiking once again, of course, in December. Even while hiking, the bond market started to price in the possibility of lower rates. And you can see that it wasn't just a couple of months later, eventually in August, the Fed eventually moved to lower rates. So, it's not just the data itself. There's other things that market participants look at. And you can see that as that data started to deteriorate slightly, it already started to price in a much bigger move that was to come over the next couple of months and quarters, right? So always keep that in mind, that it's not only the data itself. The data, of course, allows us to potentially track and anticipate things like that, but there's many other factors that we do need to keep in mind as well. Now, this example that you see on the screen, this is actually a model that I built, an economic tracker that I use. Now, something like this, it might be a little bit too too ambitious for just a regular tracker, because I wanted to make sure that it's as thorough as possible. And one important thing to add to this is that, this probably, it's not something that you want to do that you need to update manually as the data comes in, right? So let's say you only have access to something like Forex Factory, for example. Nothing wrong with that, of course. And let's say you are planning to build this out by manually putting in all of these data points as they come out. I would strongly advise against that, because it's going to take you a very, very, very long time to do, depending, of course, on what metric you're tracking. So if you are looking to do something like this, it's probably not the type of thing you want to do manually. I, for example, use Metastock Zenith. Just to give you an example, I use Metastock Zenith as my data source for this. And if you look at this sheet that I have over here, if I go to the total sheet, you can see over here, there is my formula that I use to pull all of this data from Zenith. So you can see the Thomson Reuters tab in my Excel sheet. And as long as I'm connected and online, it will obviously update this data automatically as it rolls. So, really, I would advise you, if you are planning to do something like this, if you really want to do it manually, really consider whether that is something that you can commit to. Otherwise, you might take all the time building it and you might not use it. So I wouldn't do something like this if I can't do it automatically with a data source like Zenith, just as an example. And what I did on the tracker sheet, so this is all the raw data, and then on the tracker sheet, I just made things a little bit more interesting by putting in some conditional formatting, etc., just to make it a little bit more exciting and a little bit more understandable. Just as a quick view, the colors helps you to just spot what you need to see at a glance, in my opinion. Another tip is make sure that you have an idea of where you want to go with this sheet before you start. So for me, my aim was to track various parts of the economy, the labor market, inflation, consumer output, business sentiment, housing market. My aim was to do a very thorough outlook on all of these different parts of the economy, and basically using the rate of change from month to month as evident in the colors that you can see, to basically plot the divergences or potential divergences between certain major economies, right? As an additional edge to trading their currencies, their equities, their bond markets, etc. And my aim was to use that just as an additional analysis tool to try and front run potential asset class movements, like the one we saw that I just showed you about the bond market in the US, already anticipating lower rates months before it actually happened, anticipating it would happen even while the Fed was still in a tightening cycle, tightening the month after. So do keep that in mind. So have what you want to, the idea that you have about the sheet, have that in mind. I had something in mind that where I wanted to take this, roughly, at least in the beginning. Now, of course, you're not going to get it right the first time. You might have an idea of where you're going to go, but as you develop, as you play around with the data, you're going to see that there's other ways that you might want to, show how the permeations play out in terms of the screen. So you're not going to have it perfect the first time, but having a plan in mind of where you want to take this tracker will give you some well-needed guidance and help later on. Trust me on this. Now, if you're, just looking to track the major data points for each economy, if you don't want to go into a lot of detail like I have, there's nothing wrong with that. You can strip it out and make it a bit more concise. So let's say you only want to look at the three big ones, which is inflation, growth, and employment. You don't have to look at all of these metrics, for example. And do keep in mind, every country will have different metrics for different segments of the economy. So you don't have to look at everything. You can basically just have, maybe NFP, CPI year over year, and growth year over year. But I think you'll miss out on some of the more forward-looking indicators. That is something that I will definitely add in, even if you just want to keep it as simple as possible. If I'm looking at the US, for example, in terms of my growth rate, I would rather have ISM manufacturing and non-manufacturing than I have GDP quarterly growth, because GDP quarterly growth, I'm only going to get quarterly, of course. And by the time that I get, a next quarter's growth number, that data is already too old to really do anything with. So you really want to focus on those types of indicators that's a little bit more forward-looking, especially, like we said, looking at things like ISM looking at things like industrial production, looking at things like retail sales. I think there's a lot more value in doing that than just looking at, GDP quarterly numbers as an example. In some countries where it's going to be a little bit more tricky is where you have, let's say you take Australia, right? They only release quarterly data points as well in terms of GDP growth. So you'll need to find some of the growth metrics that you need to use for that. For example, if you're looking at GDP, you're going to look at things like construction work done quarterly. You're going to look at things like CapEx quarterly, company profits quarterly. So there's going to be different things that you look at for different countries, and you'll need to scope that out and see how everything feeds through. But yeah, that's just a couple of tips from my side on how you can go about building something like this. It is quite the endeavor. It's definitely not a Sunday afternoon experiment that you can try. Do put in enough time if you want to build something like that. And as I said, you're not going to get it right the first time. In my opinion, it's definitely something worth doing as long as you have access to automatic incoming data. Like we said, with something like Zenith, definitely not something that I'll try to do from a manual update point of view. So I hope that helps. Any other questions, please don't hesitate to let us know.